seems to, or the belief is that a lot of the challenges in the banking system are essentially on the large businesses. I think we have also a pretty sensitive underbelly of the SMEs business, which has not fully revealed its hand yet. And therefore the underwriting standards in that also will come up for question as we go down this path of much faster disclosure being required by the RBI, including 1 day overdue. So the 12th February circular is a significant game-changing event in how disclosures will need to be happening in the banking system. And it will have its implications not only for the big guys, but also for the SME sector. So you're working to a whole new world of different discipline and the challenges which come with it. And I believe that there are some sectors like the steel sector where the valuations are pretty decent. But I still believe when we look at the overall menu of the first, say, 100 or 200 companies which get into this, looking at the levels of bloating which is there in the system, I believe that we should be happy if at least 40% of the principal value comes back. Okay? And we should, thereafter, I think down the road, ask the tougher question, may not be now because of the moral hazards reasons and all that which we have said, is do we need to tweak the process where we can improve the value? Finally, the purpose of a bankruptcy code is to make an efficient resolution process. And we at this stage need to revisit some of the decisions we may have taken, including for small and medium enterprises, does it make sense to keep promoters out? I think it's a question we need to ask. I'm not saying the answer is clear. Maybe for the first few cases it was obvious because you didn't want to have a case of moral hazards and everything else. But down the road for smaller and middle-sized companies where you probably have only one bidder and you keep promoters out, you could actually see resolution being even lower than what may be. So I think the evolution will happen. But in the short run, therefore, I would say that don't assume on an average in the portfolio you're getting more than 40% of the principal value. We are now down a particular path. Okay. So now on that path, we are effectively saying that the NCLT process is a two-stage process, which is stage one, instead of bankers doing JLF and all that, the NCLT process itself is a resolution process. Okay? And if resolution fails, the next option is liquidation. Correct? So I think we are now down this path. We have progressed quite a bit. At this stage, to change track right now may not be wise. But say 18 months from now, 24 months from now, we should be asking ourselves the question, how can we refine the process with the simple objective that here are a huge number of national assets. How do we ensure that we get better value out of these assets compared to losing value? We are making progress. As you know, it's there in some of the media as well. We made bids for some assets. We may win, we may not win, but we are certainly giving our best. And again, whether it's stressed assets or corporate banking or retail banking, same principles, risk-adjusted returns.
Meantime,